Participants at the Kigali African Economic Conference called on African policymakers to improve productivity and youth job creation to respond to Africa's high unemployment rate amongst the almost 200 million people aged between 15 and 24 who are either unemployed, underemployed, or in informal jobs with low productivity. Professor Mtuli Nkube, Vice President of the African Development Bank, added that conferences such as the AEC have a definite role to play.
The African Economic Conference is a knowledge marketplace, a marketplace for African economic thinkers, African political thinkers on how to move Africa forward, take stock, then move it forward. The theme this year has been on inclusive growth and sustainable development, and the issue of youth employment, job creation is at the core of that agenda. And I think that people have come up with various ideas as to how we could create jobs for the future and for our youth. The priority should be inclusive growth and sustainable growth. That on its own, I think, will force us to think about what it really means and cause the policymakers to do the right thing in that direction, which is focus on job creation. What does it require? Both supply and demand side, policies. Supply side in the sense of vocational training, making the youth and the potential employees more job ready. Demand side is about facilitating the firms to employ those who need jobs, rewarding them, giving them tax breaks, or whatever needs to be done for them to employ more people. So, including gender issues, make sure that women can participate in the labor market. All that is inclusive growth, including political inclusion.
Maybe a borderless Africa?
Borderless Africa, so that small countries can benefit as well as the bigger countries. Skills can move across the eastern region here, in Africa, the East Africa, but also in West Africa, in Southern Africa. Movement of people is part of spatial inclusion, part of human inclusion. It's a big agenda, and that's what we must focus on.
Although Africa has seen significant economic growth over the past 10 years, it has been criticized as a jobless growth as well as growth lacking in structural transformation.
The growth rate has not created nearly as many jobs as one would wish to see happen. And this is because of the nature of the growth, or the dominant nature of the growth, because even though there's a lot of progress being made in various sectors, such as telecommunications, agriculture is also booming, and in services in many countries, a large proportion of the growth results from the high commodity prices and high demand for commodities from mostly the Asian countries. And as we know, the commodity areas are not necessarily where the jobs are, and so that is why people tend to say that it's jobless growth. But it is possible to use the resources, the revenue from the growth, to be able to invest and diversify in the economy and add value to commodities, and at the same time to create the opportunities that will provide jobs for young people on the continent.
What has happened in Africa is that we have been able to achieve very high rates of growth. A lot of countries have been achieving between 5 and 10% rate of growth. But when you look at the results of that growth, except for the numbers that the GDP is increasing, you don't see it in terms of the people. You don't see the improvements in well-being. Most of that is going to a few people. So you end up with some people benefiting from the growth. Most of the population is not benefiting. So you get large inequalities.
Because as Dr. Kasekende says, Africa has not had structural transformation.
Yeah, so a lot of, some of the countries that are growing very fast, and I mentioned a country like Angola, I mentioned Equatorial Guinea, they rely on commodities. So they've been growing up to 10%, 12%. But when it comes to natural resource-driven growth, it doesn't create jobs. Because you just sell commodities, you dig the resources you sell, and doesn't create jobs. And that type of growth is actually not sustainable. You are talking about an exhaustible resource, but it's actually not even reaching the people.
When you look at economies across Africa, many of them were largely dependent on agriculture. For a number of countries, you would find agriculture was accounting for about 50 or even above 50%. The expectation for most of these countries 50 years ago at the time of independence was to move into manufacturing, and the share of resources in agriculture would go down, and you would have these high productivity areas absorbing resources. When you look at the economies now, Very few actually have managed to promote manufacturing, labor-intensive manufacturing, absorbing resources from agriculture. That is the frustration. After 50 years of implementing policies, having visions implemented, very few countries have gone through structural transformation. Now, the problem is even much bigger.
Yes.
For countries during that period that found natural resources. Because of the concentrated huge flows that come out of extractive industries, you find that oil or gold or diamonds end up accounting for a very large share of GDP and revenue or tax receipts.
In the World Bank's latest Doing Business report, Rwanda and Uganda both rank higher than Kenya, which is a bigger economy. Surely this is cause for celebration and other African countries can learn from them?
Yes. My view is that that is good news, but we should not celebrate yet, because I think the constraints and the costs of doing business in Africa are still huge. It's good that some countries are looking at this report and sort of prioritizing certain key areas in terms of easing business environment and attracting private investment.
Despite continental criticism, Rwanda continues to be hailed as one of the African continent's economic reform success stories.
In general, if you look at the continent as a whole, the growth that we've had has not been translating into as rapid improvements in the well-being of the populations as we've seen in other developing regions. And so this is a concern on average for the continent. But there are also countries that have been doing quite well. Rwanda is an example, Ghana is another, Ethiopia is yet another, that have been able to translate rapid rates of economic growth into sharp decreases in poverty, for example, as well as improvements in health and education. And so what's the difference? The difference is really policies, policies that are deliberate in translating growth, more income, into improving the well-being of the population.
A key sub-theme of this year's conference was centered on the issue of natural resources and resource beneficiation. Natural resource ministries across the continent were encouraged to rethink how to sustainably use Africa's vast mineral wealth.
I think for all of us in Africa, we really have to sit down and look carefully and seriously at the question of beneficiation from our mineral resources. I mean, the question which was raised here was around whether are we taxing these companies a lot, but basically it's a question of beneficiation. Are our young people acquiring skills from these companies in terms of learning about manufacturing, jewelry, and so on and so on? The question is not. On the whole, after mining, they export the goods and beneficiation takes place outside. And then the goods come back here very expensive for young people. So it's really draining the country from a skills development point of view. And of course, for economic exclusion, it's very difficult to participate if the practice continues as it is.
Again, Rwanda was hailed as a positive example for the continent.
You know, this country's done extremely well, given where it's come from. Rwanda yesterday is completely different from Rwanda we see today. But you are lucky then in this country because there are lessons to be learned from other countries. You don't have to wait 20 years before you say, what's happening to our locals? Are young people acquiring skills? Are we having industrial hubs here? Are we beneficiating? Which really, that's where money is. That's where economic activities are. That's where social inclusion comes in, and equity, so that, you know, there's people tend to grow more or less at the same pace. So there are lessons to be learned, and I think really here, with regard to a question of development finance, it could be earmarked to promote exactly that, participation of locals.
Rwanda is a country of relatively few natural resources, an economic priority for many of its neighbors. Analysts say that is not necessarily a disadvantage to the country and may even work in its favor.
The good thing about Rwanda is that actually sometimes having no resources is a very good thing. Some of the countries that do very well, think about South Korea, think about Mauritius. They did very well, they transformed their economies, yet they were natural resource poor. And sometimes you need that to do. And this is also a country that is landlocked. It's a small, landlocked, and natural resource poor. So what they have done is to try to attract investment, create a very good environment for business. So they are getting a lot of investment, they are diversifying their economies, and that matters. That's why Rwanda is actually a success story in as far as trying to move from, of course, a devastated economy and moving on. It's still a long way to go. I mean, it's a recovery, it's a post-conflict, we can say that, but they have done very well in terms of the environment reforms and sustaining the reforms.